Payroll is one of the largest expenses of a business, especially service businesses, and errors in the accounting of a payroll can have a drastic effect on the income statement of a small business. In today's video, we're going to discuss how to accurately account for your payroll entries. Payroll cash entries come through the bank feed into your accounting system on a net basis. What's the result? Salary expenses understated on the books if the transaction is only categorized through the bank feed. A separate journal entry needs to be made on the same date as the payroll that grosses up the salary value. The full amount of the salary is recognized, as well as the appropriate payroll taxes, benefit expense, and 401k expense as needed. And the journal entry can then be matched to the bank feed once the cash for payroll leaves the company. A more efficient way to make these journal entries is to use payroll apps that integrate into QuickBooks, such as Gusto and ADP Run. You can set up mapping in these payroll apps to push the data accurately into QBO in an automated way each pay period, clean and simple. QuickBooks Payroll automatically syncs into the accounting module of software, but each employee's pay comes through separately in the bank feed and can be burdensome if you're paying by check. Are you looking for more small business finance tips? Subscribe to our YouTube channel now.